Guess who just recorded a 40-minute video without changing the settings so it would record through these and then there was no audio at the end of the video? Me. So I'm re-recording this video and today's video is a breakdown of my trades that I did not take on the 15th of May 2023. I'm going to do EU only just because I want to go in depth with the way I look at stuff. Obviously UJ was valid to watch as well, but there wasn't really any movement on UJ, so not really too much point to watch it. But the point of me recording this video is to go through my thought process and what I do with basically when I miss positions and why I miss positions. So in this case, what I've done here is I've got obviously TradingView open and I created a quick spreadsheet, which is going to basically document the pair, the date, time, context, gross R, net R, screenshot, and then why the trade was missed. Already the reason for why all the trades were missed was because I wasn't a screen on the day. So I had other commitments during that day, which meant I just wasn't doing anything on the screen. So that's why all of today's trades are going to be missed trades, or all of yesterday's trades even. So let's get stuck into it. So overall, what I'm going to do is I'm going to go to the 1 hour and I'm just going to add this. I don't actually use sessions. It's just so I know I can easily identify where price is. So purple is my overnight, green is London, and then this red is like New York overlap. So I'm going to rewind to here. And just for the purpose of this video, I'm only going to use one 5-minute validation setup type thing. So if you've not watched my first video in Wizard Materials, I highly, highly, highly recommend watching that first, because otherwise this video is not going to make too much sense if you're trying to look at the way that I'm trading it, but it still will make sense if you're just trying to understand models and reaccumulations, redistributions, accumulations, distributions, and the stuff that's just taught in mentorship overall. Cool, good stuff. So let me get rid of this, don't need it anymore. So why was I looking at this area in the first place? So the reason why I was looking at that is because it was the daily S&D of MB3. Let's just go to the daily and identify that. So daily S&D of MB3, and I was playing this overall SSC here, where prices form the structure here. It's from the S&D, so this is the S, this is obviously the second S, and now I'm just looking for the C to confirm it to deliver to these daily highs and also deliver to the 3-day highs to continue the overall bias that EU is bullish and is likely to just move to the upside, basically. Because whenever we get a push below lows here, it always impulses. So when we get a push above highs, chances are it's going to impulse. Cool, in an overall bullish context as well. So dailies like that. 8-hour, why was I looking at the 8-hour zone? Well, the reason for that is just a simple case of this being a 2.0. So this was the 8-hour S&D of MB3. This becomes an 8-hour S&D of MB4. It's also a 8-hour 2.0, which is a potential area for higher time frame, i.e. 8-hour reaccumulation, encompasses the 4-hour potential areas of mitigation too. So this area is why I'm looking at this area. Basically, I wouldn't just look at an 8-hour S&D of MB4 without any context behind it. But the context of it is because we're in a daily S&D of MB3, and it makes sense for price to reaccumulate. By the way, if you're wondering why I'm wearing a jacket, it's really cold, so that's why I've got one on. So I do apologise if you were thinking that. Anyway, cool. So let's get straight into it. So 4-hour for me, it wasn't too clear. It looks like basically bullish, bullish, bearish, bullish, bearish, bullish, assume overall reaccumulation, bullish, bearish, bearish, still assume reaccumulation. So it just kind of just reaccumulated into these. Which that's not really a 2.0 anyway here. That's just kind of when the bearish can be, but obviously on the 8-hour is a 2.0, which is why I'm using this area. And it encompasses the potential 4-hour areas, which could have been this wick or this candle with a bit of a red top on it as well. Cool. So straight away, as the morning would have started on Monday, yesterday, so as London session would have started, I would have looked at the 1 hour and would have thought, right, well, here is the 6 a.m. candle. I generally come to the charts around 7 a.m. in the morning. My time zone right now is UTC +1, so it's also GMT +1 or BST if you want to compare it. So just to make things simple, actually, for example, if you are in New York and this is your 1 a.m. candle, so I'm basically looking at 2 a.m. your time right now. Cool. So 1 hour highs are all the way up here. Now I could wait for a break of that, push back into S&D of MB1 and then wait for a break and then back into S&D of MB2. But as we know, structure doesn't always have to move like that. It can do, but it doesn't always have to. So I like to play the fractal game quite a lot, and I like to look at the inside moves within actual MBs, which is against structure, but in line with context. So as we can see here, what is the 1 hour doing? Well, the 1 hour basically was pushing up. So if we go back a bit more, it was kind of sideways for a bit. It was kind of like a bit of a back and forth overall, like a bit of a larger back and forth, and then it started pushing down, redistributed a couple of times, and then it came into this area here. So it would actually make sense to continue shorting it, but obviously I'm in an area where I'm likely or potentially wanting to see some type of longs to push into these 3-day highs and daily highs. So I'd rather look for longs for the time being. But obviously, if we break here, then yes, it does make sense to short it. So 1 hour looks like that for the time being. So there's not really any 2.0s. There's not really any fractal S&Ds. Obviously, we do have a fractal break of structure or a fractal break in price here, where price basically it came down here, broke this low, came up there, broke this fractal high. So fractally right now we're in, well, fractally right now actually we broke again here. So realistically, depending on where the next candle is, this could be a potential 1 hour zone here, but it's very unclear. It's quite messy. That it's not. It would be very much clearer on like a 5 minute, basically, in my eyes already. So I'm not really looking at any of these zones here. So 5 minute wise, let's just go into that and have a look at what we're doing. So what I'm going to do here actually is get rid of all these because these are technically not happened just yet. So where are we right now in terms of price on the 5 minute? So where have we come from is the first question you should always ask. So we've come from overall redistribution, so bearish, redistribute, bearish, 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 bullish, bearish, bullish, bullish. So right now, because the last move is bullish in an overall context where I'm expecting price to push bullish, I could assume that this is accumulation happening right now. So I'm happy to look for longs, basically. So I don't just look at the charts and I'm like, right, cool, brilliant. Let's look at these candles right here. Cool. Well, if we get a comeback into there, we can go long. No, don't really look at, oh, bastard. Let's quickly go back without looking at price. Oh dear. That was an inconvenience. Cool. I'll never look at price that way, where I'm like, oh, I just expect price to come back to these new areas. No, I'll always look at price. I'll always look left at price and see where we come from. So in this case, what I'm trying to say here is that we have come from bearish to bullish to bearish to bullish. So this here is from this here is a 5-minute S&D of MB1. And this is a 5-minute S&D of MB2. But this is also, if we track price here and look at what price is doing, price pushed up, pulled back a tiny bit here, and then pushed up again. Let me zoom in so I can show you guys a bit further what I'm looking at here. So as price pushes up, it pulls back, and then it pushes up again, and it pulls down, breaks this pullback of the low, goes bearish structurally, pulls back up here, breaks this again, goes bearish again. So we're kind of like 2 MB to the downside right now. Breaks up, forms this fractal S&D of MB1, pulls back a bit, breaks up, pulls back, breaks down, breaks up again, forms this fractal S&D of MB1 again, because obviously we've gone bearish and we've gone back bullish. And we've also formed this intermediary structure here. So this area here is quite important because this area here, this thing that I'm marking out now is a 5-minute S&D fractal MB1 after fractal reaccumulation. It's also a 2. No, it's not 2.0, sorry, but it is this here is a 2.0 What's the 2.0 of the fractal S&D of fractal MB1 after the fractal reaccumulation? I said fractal too many times there. And it's also a 2.0 of the intermediary structure. When it comes to intermediary stuff like where you can see clear pullbacks within an overall larger MB. When it's fractal, I'm looking at more so like the immediate candles, basically. So let me get rid of all my drawings because it's becoming a bit unclear now. Cool. So what am I looking for here? If I get a tap back into this area here, I can look to go long. Obviously, we need to see some type of 5-minute triple M first, and then I can look to confirm that on a lower time frame. Or alternatively, if we get a reaccumulation to this 5-minute S&D of MB1, then I can also go long. Cool. Let's play price forward, see what it does. All right. So what it's done here is broke highs here, and it has. I'm going to play one more candle forward to see if it leaves any imbalance. It doesn't, but it does leave a 5-minute S&D of MB3, and it has got a bit of a decent claim on its own as well. The reason why this is an S&D of MB3 is because of this fractal imbalance here. So as price wicks down, it pushes up all the way up to there, then it wicks down, comes to here, and then it pushes up again. So all this area is technically imbalance that's remained unmitigated. So this is like the most extreme area where a price could mitigate if it wants to go from an MB3 perspective. Now, because we're in MB3, MB1 is no longer valid to me. It's too far down. I'd rather use the new structure if price comes all the way back down to there. Whoa. That there for a sec. This is still valid because it's a 2.0. 2.0s always remain valid for me because 2.0s are areas of potential reaccumulation for me. Let's just zoom out and look at the overall model again. So we've come from a bearish perspective into a bearish, bullish, bearish, bullish, bullish, bullish. So this now is bullish. We could expect some type of reaccumulation either into this zone here, maybe a bit further down, or maybe just below this S&D of MB3, or we could even go from the S&D of MB3. So we've got quite a few options right now that we just got to kind of wait for and see what price wants to do. Notice how I'm 20 minutes into my session, I'm not jumping on every single trade that presents itself on the 1 minute or the 2 minute or whatever it is. I'm just waiting for my setups to happen. Cool. Okay, so immediately now we wick underneath the 5-minute S&D of MB3. And we break and close beneath the MB as well. So we're now MB1 bearish. This is now no longer that interesting to me because it's just not formed a triple M out there. So I'm not interested in that one. Now what I'm looking for is we're now looking for some type of reaccumulation. Where could the reaccumulation happen? Probably this area here, with it being a 2.0 of this fractal. Comes into there. Does it form triple M? No, it doesn't. Does it form triple M? Yes, it does. So this will now be my 5-minute triple M low. And now I can jump down to the 30-second. So as long as price doesn't break and close below this low, or actually, because it's the first 5-minute triple M, as long as it doesn't break below that low altogether, it doesn't have to even close. As long as it doesn't trade below that low, I'm happy to basically use that with the overall idea that this is now the confirmation of this SSC here, and this SSC needs to deliver to at least these highs. If we go back to the 5-minute, you'll see what I mean. S&D 2.0s can act as their own structure, basically, as per webinar 98, 99, and 100, or 99 and 100. 100 for sure, but 99 as well. S&D 2.0s can act as potential areas of reaccumulation, redistribution, and can also act as their own structure. So in this case, the structure here is a S&D 2.0. So this is the structure. Sorry, this is the overall structure. This is the S&D, and now looking for the confirm to deliver to these highs here because that's the 2.0. So when MBs fail, or when MBs are likely to fail, 2.0s are good areas to look for reaccumulations. Cool. So 30-second, let's jump down to that. So what am I looking for on the 30-second now? Well, first of all, nothing, because I'm going to look left to right. So I'm going to see what price has been doing overall. So price was, let's go back to around here. So it was going bearish to bullish, to bearish, potential reaccumulation to bullish, potential reaccumulation again, bullish, 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 bearish one, bearish two, actually bearish one, yeah, bearish two, bullish one, bullish two, bullish three, bullish four, bearish one, reaccumulation into a unknown area, maybe something clever on a different time frame. Not interested anyway, doesn't really bother me. Bullish, bearish, bearish, bearish. So it's gone from bullish, 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 bullish to bearish to bullish to bearish, bearish, bearish. So I could assume either large reaccumulation or I could assume potential distribution to a potential redistribution here. But bearing in mind the area that I'm in on the time frame that I'm looking at right now, the 5 minute, I'm anticipating that even if this was a distribution, the reason for that distribution was to push prices into here, for this to be a potential fractal or actual like real accumulation. This overall, this whole area to be just like a larger accumulation to push prices higher. Cool, good stuff. So let's carry on playing price forward. So where are we right now on the 32nd? Well, we've had this fractal area here. Now, price has come from a few areas. It could have come from this wick down here, or it could have come from this candle here. In these cases, to avoid strike sharpness fallacy, I just highlight the whole area because we are on a lower time frame anyway, and on like a 1 minute or a 2 minute, this might be a very clear area. This is 32nd S&D of fractal MD1. It's fractal because I'm looking at the immediate wicks, wick, break, fractal. If this was more of like a pullback and then a push down and a push up and a clear break with a clear pullback, then it'd be intermediary for me, but this is more so fractal. So right now, analysis, if we get pushed down into there, triple M, take that long. Play price forward. It does tap into there, doesn't give me a triple M, but it does give me a potential 2.0. So this area is large. This area is huge, like a whole pip. So I'm going to refine this to half the area. And that wick as well, because that technically, the reason why I didn't refine this is because it could have come to both areas. This candle, if you look at this candle alone, this candle's been mitigated, but this wick remained unmitigated. This candle was the last unmitigated candle before price broke these fractal highs. In this case, this candle is unmitigated, and this wick is also unmitigated because there was no wick from this next candle to push into this previous wick. So I'm happy to use this as the most extreme area where price would come to. This is 32nd SD fractal MB2. Bear in mind we did just break these highs here as well. It's also 2.0. So this is like a clear area for potential reaccumulation as well if we push prices high and then come back down. So let's carry on playing price forward. Or obviously if we get like a triple M within here, I'll trade that as well. Taps into there. Cool, triple M. I'm happy to get involved in that. 1.5 pip stop. And I'm just going to mark this out here. SL. Is that burst in line with the overall stop loss being 1.5 pips and this candle only being about half that? No, it's not a burst. That's a burst, but there is a bit of a gap there, so I'm just going to move it to break even for the time being. That is a burst. I'm going to move it just under this gap in case price wants to come back and mitigate into there. That's a burst. I'm happy to move it underneath this wick because there was a bit of a wick on the end of that candle, but these two candles on a different time frame are going to be a clear burst. So like say on a 1 minute time frame, that's a clear ass burst. But on a 30-second, the second one's a bit of like a meh, but yeah. Messes around a bit. See if we get a burst from here. Okay, we do get a burst. Now, I'm going to move it just under this wick here because whilst this is the low of the burst, I understand that this area may want to be mitigated, but this candle is within this overall larger candle here. So I'd rather just protect myself below this low here. Remember how I'm using two candles sometimes as well when it's a bit unclear? In this case, it's a bit unclear. Let price play forward. Okay, so it does break again, but it leaves a fat wick on the top, so I'll just wait. Again, comes all the way down, and it does start mitigating this area. I actually don't remember if it starts me out here or not, if it starts me out later. Okay, it continues up, so it's mitigated, and now it's continuing up, so I'll move it just below here because this here is a unmitigated area of where price could come back down to. That is, no, I'll wait for another candle, but I will move it to just here because it's a bit wicky on either side. Okay, cool. Well, what I was going to do now is I'm just going to identify here that this candle here is the 30-second S&D of MB1, and this area, let's have a look, this area here is a 30-second S&D of MB2. I'm not prepared to use this as a 2.0, even though it is technically a 2.0. Actually, yeah, it's kind of a 2.0 to be honest, because here, when price broke those highs up there, or when price was all the way up there, it came basically this candle liquidated either side of that candle. So technically, you could argue that's kind of like a reset, and then price created a bit of a imbalance here along there, and then created a 2.0 out of that by mitigating. But at the same time, my 2.0 rules don't factor in for absorptions like this. So actually, I'm not really that interested in using this area as a 2.0. This is just a 30-second S&D of MB2, which is more than enough confidence to use as an area anyway to trade. See what price does. Price continues to push up, so I'll move it just under here. Messing around a bit. Pushes up. Put it just under here. There is a bit of an imbalance there, so I'm going to move my stop to just under this wick there to factor in for any potential mitigation. That cleared that imbalance. I can move below the triple M. Price still may want to mitigate this triple M. Mitigates a tiny bit of imbalance within there. Might want to mitigate this green section. Starts mitigating the green section. So you push up from here now. Starts me out. Cool. Oops. No problem. Perfect. So that is a 5.2R. Starts me out right there. I'm just going to mark this out here. Copy link. Puts into a spreadsheet that I've just created for the time being. So EU date was 15th of May 2023. Yeah. 48.30. Now, in the context, I normally just add information about the trade. For the purpose of this, I'm just going to get rid of it for the time being, but please make sure you're adding the context onto there. I've already documented these into my own journal anyway, so I'm just not going to do it all over again. There's literally no point. But just make sure you're documenting why you've missed a trade and also the context behind the trade as well, because you may start seeing trends as to certain mistrades that keep happening, and then you can use that data to support your ongoing development. Gross R 5.2, net R is gross R minus 1, 1R for commission spread slips. Screenshot is there. Cool. First trade done. So now where are we right now? So we're 2 MBs up. 30-second S&D of MB1 is still a nice area to use, and it's also a 2.0 from the fractals. So even if price continues to form an S&D of MB3, this area is still nice to use. So I'm expecting the price to basically come into this area or this area now, or create some new intermediary structure. Okay, so we've had Fractal reaccumulation. You might be thinking, what? Let me show you. So price breaks, comes down. So we're forming like little pullbacks here, little MBs on a lower time frame. Pushes up, pushes down, liquidates this low. Again, that's a reaccumulation on a lower time frame. Pushes up, that's the low of this range, that's the high of that range. Pushes down, pulls back, pushes down, pulls back, breaks a high there. Reaccumulation, potential tap back into this zone, and then continuation. And just to kind of identify what I mean, we have a look at this whole area on a lower time frame. Orange and just going on like a 10-second maybe. You'll notice here, say, overall reaccumulation and then pushing prices higher. Maybe Bitcoin on the 15-second. The point is you don't have to look at these time frames, but like once you start understanding fractals, you realize that even though I'm only entering on the 30-second, I'm taking into account what's happening on the 30-second, what's happening on the 1 minute, what's happening on the 15-second, the 10-second, the 5-second, the 23-second, the 12.5-second, all these hidden saucy time frames. You'll understand and you realize that you only really need a certain set of time frames. You should still use all time frames to identify your overall bias and context. But when it comes to making split-second decisions, like this is the 30-second chart, you're going to struggle having time to look at the 1 second, 5 second, 10 second, 15, 30 second, and 1 minute to get your entry. Like I've been there, it's not easy. So understanding how the 30-second chart works for me and understanding that it's like a good midpoint for me to realize what's going on the 1 minute, on the 15-second, on the 10-second, and the 5 and the 1 second, I just prefer to use it basically. So fractal reaccumulation, where we've had a fractal break of this high here, which has also an intermediary break because there's a clear inside pullback, which has come from this area down here. So this is now a grey 30-second S&D of MB and fractal, and God, I can't spell. That's MB1. It's kind of in the middle of nowhere, so yeah, let's see what happens when price gets to it. Messes around, comes into my area. Potential absorption. Breaks the lows. Okay, not interested. Because if price snapped back up in there, that would have been an absorption, and I would have happily took that trade. But it's come back into the 30-second SD and MB2, so I'd rather use a potential triple M from there now. So this area is no longer interesting to me, and we're now seeing some sort of overall on a low time frame, say like on a 1 second or a 5 second. This could have been a distribution, that could have been a redistribution to continue pushing prices down, and we might now see some sideways price action to form a 1 second or a 5 second accumulation to then start pushing prices back up to form the overall 30-second intermediary reaccumulation. So yeah, like you have to start thinking in fractals with this type of stuff. Let's see what happens here. Messes around a bit. Doesn't really form any type of triple M. Nope. Okay. Absorb the area. Came right back into the area within this wick. Yep. Happy to say that. 1.5. See what happens with that one. Stops me out. No problem. Size of loss. Document that. GU 323 entry 81730 minus 1 equals D3 minus 1. Cool. So where we're now, we're actually going 30-second and B1 bearish. This is no longer interesting. So now I'm expecting price to either come into this zone, which is still valid, or create some type of intermediary structure and push prices back up, or create an NB1 to the upside, and I can trade that to the upside as well. Normally in these cases, we're more likely to see price not come back to this area here and probably see some type of push up and then come back into a zone and then continue pushing higher. Just because when price wants to go, it'll go. It's not going to wait for you or come back for you. Does form a triple M, but it's just come out of a random area, so I'm not going to trade that. Brace to the upside. One more candle to see if it leaves any imbalance here. Fails to leave imbalance, but it does also mitigate this. So right now the last unmitigated portion is actually just this wick down here. So it's now 30-second SNV1. See what price does. Comes into there, just taps it. Let's just see what it's done here. So it's come into there, it's just tapped it. So this would be a valid potential entry based on that. Okay, forms the second one. So if you missed the first one, you could have gotten on the second one. Yep, break even. Just make sure I've got this documented here as well. Stop loss break even. Okay, not a proper break, not a proper burst. May just mess around here for a while. That's okay, but I'll just put it under here. Actually, no, I'm not going to push price forward because these are just not bursts at all. Like it has come down, it has gone back up, but it's formed that wick on the end. One more candle, and yes, I would move it, but for the time being, like it doesn't really make too much sense to. On a different time frame, all these candles may be a burst, like say on a 3 minute time frame, maybe on a 2 minute time frame, that might be. So I'm going to move my stop just to there and just leave it there. Messing around still. I need some sort of decent candle here. So again, still messing around. I'll move my stops just under here, but I'm going to leave price do what it wants to do. Okay, that's a bit more like it. So I'm going to move it under this triple M low because obviously a triple M is a good indication of a potential low. So I'm also going to look at the mitigation. So this candle here mitigates that triple M. This candle mitigated that. And this candle mitigated that. That candle remains unmitigated. So I'm going to move it just to here for the time being. Bearing in mind that this wick here is unmitigated and it may want to absorb just below it as well. Okay, fair enough. Yes. Stop loss there. Obviously, I'm looking at two candles because it may want to come back into this triple M area here, or it may want to fill in any potential fractal imbalances, or it might not. Might just want to go. Happy to move my stop loss to here. A lot of profit on the table now, by the way. I've locked in 4.7 pips, and there is 5 pips on the table. So this comes down to preference as to whether you'd want a partial or whatever you might prefer, but I just kind of leave it as it is. Because I know over a large sample size, my method will give me the best possible results. You might just want to mess around here for a while, which is fine. Stops me out, no problem. 3.13. Actually, I would not be surprised if it just goes from here because that still remained unmitigated. But 3.13, and I'm just going to screenshot this one as well. Copy link. 3.13 equals D3 minus, D4 minus 1. 15 to 30 U. Oh wait, 23. Ooh, don't like that. Oh wait, 2300. There we go. It may just continue from there. I would not be surprised at all. So I may have mismanaged that one. Okay, maybe. Whatever. So we have formed a 30-second fractal S&D ND1. It's a 2.0 out of there, but this doesn't make any sense for me to be an S&D. A 2.0 has to come from either a 2.0 or an S&D. Plus the 2.0 from here was actually all the way down there. So this, yes, is a 2.0. And also S&D of... Right, start again, 30 sec. S&D Oh my god. MB2 and 2.0. Cool. Yep. So because this area is kind of in the middle of nowhere, I'd want a 2.0 out of this area to take it higher. So we need a 2.0 from this area first. We've now also created a secondary 2.0. Sorry, a secondary 30 sec fractal S&D of MB2, 30 second intermediary S&D of MB1. That is not a 2.0 though, so let's just see what happens here. Comes back into the zone. Now we've got to think about free money space. If it comes back into here, that is a lot of free money space to these highs here, but if it comes back into here, there's not that much free money space into there. So let's just see what happens anyway. I do want a 2.0 regardless. Nope, not even a 2.0, so there's nothing really to look at, but it does absorb. So I don't use absorptions 2.0, so we'll see what happens here anyway. We'll see, and we'll go from there. Bearing in mind, guys, the 5 minute I know for a fact is not invalidated yet. So 5 minute triple M low at first was there, it then ended up there, and it then ended up there. So when it's the first triple M all the way at the bottom, I'll be happy to I'll be happy to stop looking at the 30 second even if price trades a tiny bit below it. But once prices started pushing, I know that these cases can be quite frequent where it just wicks underneath the previous triple M. So in this case, I'll still look to trade it until price breaks and closes below a previous triple M. So in this case, yes, we do have another triple M up here. So as long as price does not break and close below here, then I can still look at the 30 second. And if it does break and close below here, I can then look at this overall larger 5 minute S&D of MB1 on a 5 minute chart, basically. So I'm going to mark it out there. So 5 minute S&D of MB1. Has it come from any potential 2.0s? No, it has not. So either I look for 30 second entries within here, or if that breaks, this is my no trade zone, and then I'll wait for a 5 minute triple M within here. No 2.0s out there. Messing around now. Fractal. Again, after fractal reaccumulation, or even intermediary reaccumulation, there is a fractal S&D zone. Fractal S&D from B1 after intermediary reaccumulation. Comes into there, I need a 2.0. Not 2.0, that is a 2.0 straight out of here. It's now my 2.0. So I'm happy to take a trade if it basically taps into this 2.0 forms triple M. It did actually form a, this 2.0 also acts as the 2.0 intermediary S&D MB1. 30-second S&D of intermediary MB1 because of this imbalancing, because of this actual like inside break, with this being the last unmitigated portion. Yes, it does have this wick, but this is the most extreme unmitigated portion. Getting very wicky around here. Candles are becoming a bit clearer now. Forms a triple M, pretty deep into the zone. Happy with that. Stop out, -1. No problem. So that is a -1 there. Take a screenshot of that and document that into the journal. Don't know what happened there. Well, see what time this trade was entered at. This was 9:02, 30 seconds. Cool. Good stuff. Has the 5 minute invalidated? Nope. Triple M low's all the way down there. Has it formed another triple M I can use though? Yes. As long as it doesn't break and close below there, I can still look for 30-second entries. So it does now tap into this 30-second SD of fractal MV1. And obviously, like I said, it needs 2.0 off this area first anyway. Very sideways. 2.0 forms from here. Which is 2.0, to be honest. Carries on breaking up. Form this new area now. That 2.0 could be potentially there with reaccumulation, but obviously the low will now move up to here. So this is that was a 30-second S&E of MB2. This is now a 30-second S&E of MB3. And this is a 2.0, which could be a potential area of reaccumulation. Saying that, it's already mitigated, I just missed that. So this is actually now mitigated. So I'm going to ignore this area altogether. Nice free money zone still, so I can still look to trade that. 5 minute, what does it look like? Still clear, all good. Tap into there and I can take a triple M. Formed in MB4. I'd need some sort of a 2.0 build up to even consider trading that. I'd rather price come back into here as the 2.0 of this. Yep. Like I said, I'm not looking at this zone anyway, rather it form 2.0s. Invalidates that zone altogether. See if we get a triple M within here. So it's now 30-second reaccumulating. Messes around. Does form triple M here. Zone. Looking for some type of burst. Yeah, that's a nice burst because it's pushed down and then it pushed up. So I'm happy to move my stop just under here now. This one. Nice. Stops just under there, factoring in for that tiny bit of a wick as the inbounds, and then maybe just under that a bit as well. Nope. 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 Same me out. 4. 0.4R. Screenshot that. 0.4. Entry for this was 9:25 a.m. 15th, 3rd, 25th, 2023. EU again. Cool. So by this point, right, we've got a win, a loss, a win, a loss, and a break-even trade. So by this stage, I'd stop because, like, you might be thinking, what? It was like 6 hours on the table, but after you consider all the external factors such as slips, commissions, and all that type of stuff, then yes, this is the more likely scenario when you're trading. Like this is the stuff that you don't see when you're actually backtesting. But the net R, it can be different. Like most of the time, the net R is actually more around the 0.7 mark. I just round it up to a 0.1. Sorry, a full one. So even if we did a 0.85 as an average, overall I'd be looking at something like 2.5% for the day, which is brilliant. Like that's perfect stuff. Let's just see until this area becomes invalidated, actually, just for fun and games, really. So price does form a new triple M here, and then another triple M here. So let's just see if we get any other entries after that one. bearing in mind as well, guys, look at the 5 minute, like it's wiki as. So whether I would actually took these trades in live, maybe not. But in this case, I'm just documenting. So it's good to document and see what kind of happens in these missed positions. So this here, so I'll mitigate that form of 2.0 out of there, which didn't do anything. Not really that interested in this at the moment at all. Just forming an intermediary break from here, which comes from, this is the most extreme area, so 30-second untested MB1, in case it does want to come back down to there. It does. Check the 5 minute quickly, see what the 5 minutes like. Still valid. Cool. See if we get a triple M though. We don't get a triple M, but we do get a potential 2.0. Can refine it down to there. Trades right through it. See where this 5 minute area ends. 5 minute ends on this candle here. So if that candle closes below this 5 minute triple M low, then I stop. It's coming to this 30-second fraction less than MB1, where I would have needed a 2.0, but this is old data now, and I had those 2.0s already anyway, so I'm not looking at that. And it's closed below that 5 minute triple M. So I'm now back to the 5 minute, and I'm looking for 5 minute setups now, basically. So yeah, these setups, debatable. Price was very wiki, at least for these last couple, but these setups are definite. So overall for the day, from 7:30 till about 10 a.m., this would have been a 6.73 gross R and net R of 2.48-ish, which is very realistic, very possible, and very doable. And yeah, cool. So that's how my day would have looked. Fairly good day, very, very good day actually. Every day of a profitable day or a loss day or a break-even day or a no trade day is a good day. And yeah, that's a bit more of my system in depth.